Chapter 9 Liens and Easements. Introduction Objectives. In this chapter, we will discuss liens and easements. At the end of this chapter, you will be able to 1. Define a lien and discuss lien types. 2. Explain the different types of specific liens and discuss lien priority. 3. Describe easements and encroachments. Key terms. There are a number of important terms in this chapter. Remember to pay particular attention to these terms when you see them. Appertenances. General lien, specific lien. Dominant tenement. Involuntary voluntary lien. Easement. License. Easement appertenant. Lis pendants. Easement by condemnation. Mechanics lien. Easement by grant. Mortgage. Easement by implication. Party wall. Easement by necessity. Possessory non-possessory. Easement by prescription. Right-of-way. Easement for light and air. Servient tenement. Easement in gross. Subordination agreement. Encroachment. Tax lien. Encumbrance. The New York Bureau of Educational Standards requires that you spend 125 minutes studying the material in this chapter. Your course timer can be found in the upper right-hand corner of your screen. Encumbrances. An encumbrance is an interest in and right to real property that limits the legal owner's freehold interest. In effect, an encumbrance is another's right to use or take possession of a legal owner's property, or to prevent the legal owner from enjoying the full bundle of rights in the estate. An encumbrance does not include the right of possession and is therefore a lesser interest than the owner's freehold interest. For that reason, encumbrances are not considered estates. However, an encumbrance can lead to the owner's loss of ownership of the property. Liens and easements are the most common types of encumbrance. A lien, such as a tax lien, can be placed on the property's title, thereby restricting the owner's ability to transfer clear title to another party. An easement, such as a utility easement, enables others to use the property, regardless of the owner's desires. The two general types of encumbrance are those that affect legal ownership, value and transfer, and those that affect the property's use. Restrictions to ownership, value and transfer include liens. Deed conditions. Restrictions to use include easements, encroachments, licenses, deed restrictions. Definition of lien. A lien is a creditor's claim against personal or real property as security for a debt of the property owner. If the owner defaults, the lien gives the creditor the right to force the sale of the property to satisfy the debt. For example, a homeowner borrows $5,000 to pay for a new roof. The lender funds the loan in exchange for the borrower's promissory note to repay the loan. At the same time, the lender places a lien on the property for $5,000 as security for the debt. If the borrower defaults, the lien allows the lender to force a sale of the house to satisfy the debt. The example illustrates that a lien is an encumbrance that restricts free and clear ownership by securing the lien property as collateral for a debt. If the owner sells the property, the lien holder is entitled to that portion of the sales proceeds needed to pay off the debt. In addition, a defaulting owner may lose ownership altogether if the creditor forecloses. In addition to restricting the owner's bundle of rights, a recorded lien effectively reduces the owner's equity in the property in an amount equal to the lien amount. The creditor who places a lien on a property is called the lioner, and the debtor who owns the property is the lienee. Legal features. Liens have the following legal features. A lien does not convey ownership, with one exception. A lioner generally has an equitable interest in the property, but not legal ownership. The exception is a mortgage lien on a property in a title theory state. In these states, the mortgage transaction conveys legal title to the lender, who holds it until the mortgage obligations are satisfied. During the mortgage loan period, the borrower has equitable title to the property. A lien attaches to the property. If the property is transferred, the new owner acquires the lien securing the payment of the debt. In addition, the creditor may take foreclosure action against the new owner for satisfaction of the debt. A property may be subject to multiple liens. There may be numerous liens against a particular property. The more liens there are recorded against a property, the less secure the collateral is for a creditor, since the total value of all liens may approach or exceed the total value of the property. A lien terminates on payment of the debt and recording of documents. Payment of the debt and recording of the appropriate satisfaction documents ordinarily terminate a lien. If a default occurs, a suit for judgment or foreclosure enforces the lien. These actions force a sale of the property. Lien types. Liens may be voluntary or involuntary, general or specific, and superior or inferior. Voluntary and involuntary. A property owner may create a voluntary lien to borrow money or some other asset secured by a mortgage. An involuntary lien is one that a legal process places against a property regardless of the owner's desires. If statutory law imposes an involuntary lien, the lien is a statutory lien. A real estate tax lien is a common example. If court action imposes an involuntary lien, the lien is an equitable lien. An example is a judgment lien placed on a property as security for a money judgment. General and specific. A general lien is one placed against any and all real and personal property owned by a particular debtor. An example is an inheritance tax lien placed against all property owned by the heir. A specific lien attaches to a single item of real or personal property and does not affect other property owned by the debtor. A conventional mortgage lien is an example, where the property is the only asset attached by the lien. We'll discuss superior and inferior a little later in this chapter. General liens. Judgment lien. A judgment lien results from a lawsuit. It attaches to real and personal property as a result of a money judgment issued by a court in favor of a creditor. It becomes a general, involuntary lien on all the real property the debtor owns in the county when it is filed by the county clerk. A transcript of the lien can also be filed in other New York counties where the debtor owns other real property. A judgment is a lien against the property for 10 years. In New York, if the lien is renewed in year 9, it will remain in effect for an additional 10 years against real property and 20 years against personal property. During this time, it could be paid or it could be discharged through a bankruptcy filing. If a creditor so chooses, he or she could obtain a court order to renew and extend it for additional periods of time. The creditor may obtain a writ of execution to force a sale of attached property and collect the debt. After paying the debt from the sale proceeds, the debtor may obtain a satisfaction of judgment to clear the title records on other real property that remains unsold. Judgment liens take priority based on the date the judgment is recorded in the county clerk's office. If more than one creditor obtains and files a judgment, they will be placed in order by date with the first filed judgment taking priority. The creditors are then paid in order of highest to lowest priority. We'll talk more about the priority of liens later in this chapter. Lis pendens. Lis pendens is a legal document giving notice of an action that has been filed against a parcel of property. Lis pendens is a Latin term that means action pending or pending litigation. A notice of lis pendens is not the same as placing a lien on a property. It is only notice of a pending action that involves the title to or possession of a specific piece of real estate. Therefore, it could not be used in a suit to recover attorney fees or broker commissions. The result of filing a lis pendens, however, is that the property cannot be freely sold or encumbered. So, the title to the property is unmarketable during the period of the litigation. A mortgage lender usually files a lis pendens at the start of a foreclosure action. Other types of liens. Estate and inheritance tax liens. State inheritance tax liens are general liens that arise from taxes owed by a decedent's estate. The lien amount is determined through probate and attaches to both real and personal property. New York requires a tax on all the real and personal property the heirs inherit. The heirs are permitted to sell property from the estate to satisfy the tax bill. Deceased person's debt. The federal government also enforces a tax on the estate of persons who have passed away. It is known as the federal estate tax, and it is imposed when the property transfers from the estate of the deceased person to the beneficiary. Beneficiaries may be granted an extension to pay the tax if they can show that the estate would have to sell an asset at a sacrifice price. When an estate gets an extension, however, the U.S. Treasury has a lien on the property. Other types of liens. Corporation franchise tax. New York has a corporation franchise tax that it levies on corporations for doing business in the state. New York City also has a tax that it imposes on corporations doing business in the city. This tax is based on the net profit of the business, and if it is not paid, it becomes a lien on all the property, both real and personal, that the corporation owns. If the tax is not paid over time, the state could choose to dissolve the corporation so that it could not legally do business in New York any longer. Internal Revenue Service liens. The Internal Revenue Service can create a lien for failure to pay any personal federal income taxes or any taxes relating to income, such as employee withholding tax, federal unemployment tax, FICA, or self-employment taxes. The New York Department of Taxation could also create a lien for unpaid taxes, such as for unpaid sales and use taxes. The government or state creates the lien by filing a lien certificate against the owner in the county where the property is located. These liens are general liens and do not automatically receive payment priority. Priority is generally determined based on the date the lien was placed on the property. Check your understanding. Print this screen, answer the questions and then advance to the next screen to see the answers. 1. What are the two most common types of encumbrances? 2. Most liens do not convey ownership. What is the one exception to that rule? 3. What is a judgment lien and how long does it last? 4. What is a corporation franchise tax and on what is it based? Check your understanding. Answers 1. What are the two most common types of encumbrances? Liens and easements. 2. Most liens do not convey ownership. What is the one exception to that rule? A mortgage lien conveys legal title to the lender. 3. What is a judgment lien and how long does it last? A judgment lien results from a lawsuit. It attaches to real and personal property as a result of a money judgment issued by a court in favor of a creditor. It lasts for 10 years and can be renewed. 4. What is a corporation franchise tax and on what is it based? A tax levied on corporations for doing business in the state. This tax is based on the net profit of the business, and if it is not paid, it becomes a lien on all the property, both real and personal, that the corporation owns. Specific liens. Real property tax lien. The local legal taxing authority annually places a real estate tax lien, also called an ad valorem tax lien, against properties as security for payment of the annual property tax. The amount of a particular lien is based on the taxed property's assessed value and the local tax rate. According to New York law, a real property tax lien has priority over all other liens. If the property taxes are not paid on time, the county tax collector can begin legal proceedings to collect those taxes. In such cases, the money to pay the taxes is usually acquired through the forced sale of the property. Mortgage lien. A mortgage lien is a voluntary lien. The borrower gives the lien to the lender as security for the loan on the property. It actually becomes a lien when the lender disburses the funds and the borrower signs the mortgage documents and delivers the documents to the lender. The lender will have the documents recorded in the county clerk's office. Lenders usually require a first mortgage lien. This means that no other liens on the property will take priority over the mortgage, except for the property tax lien we just discussed. The lien is removed when the property is fully paid for. The lender will sign a satisfaction certificate to remove the lien. Specific liens. Mechanics liens. A mechanics lien secures the costs of labor, materials, and supplies incurred in the repair or construction of real property improvements. If a property owner fails to pay for work performed or materials supplied, a worker or supplier can file a lien to force the sale of the property and collect the debt. Any individual who performs approved work may place a mechanics lien on the property to the extent of the direct costs incurred. Note that unpaid subcontractors may record mechanics liens whether the general contractor has been paid or not. Thus, it is possible for an owner to have to double pay a bill in order to eliminate the mechanics lien if the general contractor neglects to pay the subcontractors. A mechanics lien must be placed within 4 months of the completion of work on a single dwelling and within 8 months on other buildings. The lien will expire in 1 year from the filing, but it can be renewed. New York lien law may allow brokers to file claims for unpaid leasing commissions as mechanics liens. This is allowed if the property is not used as residential property, the lease is 3 or more years long, and the broker was working under a written commission agreement. Such a lien must be filed within 8 months of the date when the commission was due. The priority of a mechanics lien dates from the time when the work was begun or completed. For example, a carpenter finishes a job on May 15th. The owner refuses to pay the carpenter in spite of the carpenter's 2-month collection effort. Finally, on August 1st, the carpenter places a mechanics lien on the property. The effective date of the lien for purposes of lien priority is May 15th, not August 1st. Effects of liens on the title. A lien is an encumbrance that restricts the free and clear ownership of the property. If a property is being sold, all liens should be paid in full before the property transfers ownership. Depending on the kind of lien, non-payment could trigger a foreclosure action, and if the property has transferred ownership, the new owner is in danger of losing the property. Title insurance can protect the buyer in such a situation. The title search will uncover any liens against the property and serve as notice to the prospective buyer of the condition of the title. We'll talk more about title insurance in a later chapter. Superior and inferior liens. The category of superior, or senior, liens ranks above the category of inferior, or junior, liens, meaning that superior liens receive first payment from the proceeds of a foreclosure. The superior category includes liens for real estate tax, special assessments, and inheritance tax. Other liens, including income tax liens, are inferior. Here are some other types of liens that we have not yet discussed. Special assessment lien. Local government entities place assessment liens against certain properties to ensure payment for local improvement projects such as new roads, schools, sewers, or libraries. An assessment lien applies only to properties that are expected to benefit from the municipal improvement. State intangible tax lien. This type of tax lien is filed for non-payment of taxes on intangible property. Vendor's lien. A vendor's lien, also called a seller's lien, secures a purchase money mortgage, a seller's loan to a buyer to finance the sale of a property. Municipal utility lien. A municipality may place a utility lien against a resident's real property for failure to pay utility bills. Lien priority. Within the superior and inferior categories, a ranking of lien priority determines the order of the lien's claims on the security underlying the debt. The highest ranking lien is first to receive proceeds from the foreclosed and liquidated security. The lien with lowest priority is last in line. The owner receives any sale proceeds that remain after all the liens have been paid. Lien priority is of paramount concern to the creditor, since it establishes the level of risk in recovering loaned assets in the event of default. Two factors primarily determine lien priority: the lien's categorization as superior or junior. The date the lien was recorded. Superior liens and their rank order include real estate tax liens, special assessment liens, federal estate tax liens, state inheritance tax liens. Junior liens and their rank order include federal income tax liens, state corporate income tax liens, state intangible tax liens, judgment liens, mortgage liens, vendor's liens, mechanics liens. Lien priority. All superior liens take precedence over all junior liens regardless of recording date, since they are considered to be matters of public record. Thus, a real estate tax lien recorded on June 15 has priority over an income tax lien recorded on June 1. A junior lien is automatically inferior, or subordinate, to a superior lien. Among junior liens, date of recording determines priority. The rule is, the earlier the recording date of the lien, the higher its priority. For example, if a judgment lien is recorded against a property on Friday, and a second mortgage lien is recorded on the following Tuesday, the judgment lien has priority and must be satisfied in a foreclosure ahead of the mortgage lien. The mechanics lien is an exception to the recording rule. Its priority dates from the point in time when the work commenced or ended, as state law determines, rather than from when it was recorded. The following example illustrates how lien priority works in paying off secured debts. A homeowner is foreclosed on a second mortgage taken out in 2001 for $25,000. The first mortgage, taken in 1997, has a balance of $150,000. Unpaid real estate taxes for the current year are $1,000. There is a $3,000 mechanics lien on the property for work performed in 1999. The home sells for $183,000. The proceeds are distributed in the following order: 1. $1,000 real estate taxes. 2. $150,000 first mortgage. 3. $3,000 mechanics lien. 4. $25,000 second mortgage. 5. $4,000 balance to the homeowner. Note the risky position of the second mortgage holder. The property had to sell for at least $179,000 for the lender to recover the $25,000. Subordination agreements. A liener can change the priority of a junior lien by voluntarily agreeing to subordinate, or lower, the lien's position in the hierarchy. This change is often necessary when working with a mortgage lender who will not originate a mortgage loan unless it is senior to all other junior liens on the property. The lender may require the borrower to obtain agreements from other lien holders to subordinate their liens to the new mortgage. For example, interest rates fall from 8% to 6.5% on first mortgages for principal residences. A homeowner wants to refinance her mortgage, but she also has a separate home equity loan on the house. Since the first mortgage lender will not accept a lien priority inferior to a home equity loan, the homeowner must persuade the home equity lender to subordinate the home equity lien to the new first mortgage lien. Deed restrictions. A deed restriction is a limitation imposed on a buyer's use of a property by stipulation in the deed of conveyance or recorded subdivision plat. A deed restriction may apply to a single property or to an entire subdivision. A developer may place restrictions on all properties within a recorded subdivision plat. Subsequent resales of properties within the subdivision are thereby subject to the plat's covenants and conditions. A private party who wants to control the quality and standards of a property can establish a deed restriction. Deed restrictions take precedence over zoning ordinances if they are more restrictive. Deed restrictions typically apply to the land use, the size and type of structures that may be placed on the property, minimum costs of structures, engineering, architectural, and aesthetic standards, such as setbacks or specific standards of construction. Deed restrictions in a subdivision, for example, might include the minimum size for the residential structure, setback requirements for the home, and prohibitions against secondary structures such as sheds or cottages. Deed restrictions are either covenants or conditions. A condition can only be created within a transfer of ownership. If a condition is later violated, a suit can force the owner to forfeit ownership to the previous owner. A covenant can be created by mutual agreement. If a covenant is breached, an injunction can force compliance or payment of compensatory damages. Check your understanding. Print this screen, answer the questions and then advance to the next screen to see the answers. 1. What type of lien takes priority over all other liens? 2. What is a mechanic's lien? 3. What factors determine lien priority? 4. How can the priority order of a junior lien be changed? Check your understanding. Answers 1. What type of lien takes priority over all other liens? Real property tax lien. 2. What is a mechanic's lien? If a property owner fails to pay for work performed or materials supplied, a worker or supplier can file a mechanic's lien to force a sale of the property and collect the debt. 3. What factors determine lien priority? The lien's categorization as superior or junior the date the lien was recorded for. How can the priority order of a junior lien be changed? A liener can change the priority of a junior lien by voluntarily agreeing to subordinate, or lower, the lien's position in the hierarchy. Easements. An easement is an interest in real property that gives the holder the right to use portions of the legal owner's real property in a defined way. An easement does not give any possessory rights, just the right of ingress and egress. For that reason, an easement is said to be a non-possessory interest in property owned by someone else. A common term for an easement is a right-of-way. Easement rights may apply to a property's surface, subsurface, or airspace, but the affected area must be defined. The receiver of the easement right is the benefited party. The giver of the easement right is the burdened party. Essential characteristics of easements include the following. An easement must involve the owner of the land over which the easement runs, and another, non-owning party. One cannot own an easement over one's own property. An easement pertains to a specified physical area within the property boundaries. An easement may be affirmative, allowing a use, such as a right-of-way, or negative, prohibiting a use, such as an airspace easement that prohibits one property owner from obstructing another's ocean view. The two basic types of easement are appertenant and gross. Easement appertenant. An easement appertenant gives a property owner a right of usage to portions of an adjoining property owned by another party. The property enjoying the usage right is called the dominant tenement, or dominant estate. The property containing the physical easement itself is the servient tenement, since it must serve the easement use. The term appertenant means attaching to. An easement appertenant attaches to the estate and transfers with it unless specifically stated otherwise in the transaction documents. More specifically, the easement attaches as a beneficial interest to the dominant estate and as an encumbrance to the servient estate. The easement appertenant then becomes part of the dominant estate's bundle of rights and the servient estate's obligation, or encumbrance. Transfer. Easement appertenant rights and obligations automatically transfer with the property upon transfer of either the dominant or servient estate, whether mentioned in the deed or not. For example, John grants Mary the right to share his driveway at any time over a 5-year period, and the grant is duly recorded. If Mary sells her property in 2 years, the easement right transfers to the buyer as part of the estate. Non-exclusive use. The servient tenement, as well as the dominant tenement, may use the easement area, provided the use does not unreasonably obstruct the dominant use. Easement by necessity. An easement by necessity is an easement appertenant granted by a court of law to a property owner because of a circumstance of necessity, most commonly the need for access to a property. Since property cannot be legally landlocked, or without legal access to a public thoroughfare, a court will grant an owner of a landlocked property an easement by necessity over an adjoining property that has access to a thoroughfare. The landlocked party becomes the dominant tenement, and the property containing the easement is the servient tenement. 2 elements are essential to this type of easement. There must have been a common grantor of the dominant and servient estates. There must be a reasonable necessity for the easement, not just for convenience. This type of easement is also known as an easement by implied grant. Easement for light and air. Unlike the easement by necessity we talked about on the previous screen, where an owner has the right to access when his or her property is landlocked, no such right exists to light and air. So, a neighbor would be within his or her rights to build a structure that cuts off an adjoining property owner's light and air. To eliminate this occurrence, a property owner could attempt to purchase an easement for light and air over the neighbor's property. An easement of this kind should be in writing. For example, if an owner has a wonderful view of a beautiful local lake which is located on the other side of his or her neighbor's property, the owner might try to get an easement for light and air over the neighbor's property. If the easement is correctly created and recorded, neither the current owner nor any subsequent owners could build a structure in the airspace. Party wall easement. A party wall is a common wall shared by 2 separate structures along a property boundary. Party wall agreements generally provide for severalty ownership of half of the wall by each owner, or at least some fraction of the width of the wall. In addition, the agreement grants a negative easement appertenant to each owner in the other's wall. This is to prevent unlimited use of the wall. In particular, a destructive use that would jeopardize the adjacent property owner's building. The agreement also establishes responsibilities and obligations for maintenance and repair of the wall. For example, Helen and Troy are adjacent neighbors in an urban housing complex having party walls on property lines. They both agree that they separately own the portion of the party wall on their property. They also grant each other an easement appertenant in their own portion of the wall. The easement restricts any use of the wall that would impair its condition. They also agree to split any repairs or maintenance evenly. Other structures that are subject to party agreements are common fences, driveways and walkways. Easement in gross. An easement in gross is a personal right that one party grants to another to use the grantor's real property. The right does not attach to the grantor's estate. It involves only one property, and, consequently, does not benefit any property owned by the easement owner. There are no dominant or servient estates in an easement in gross. An easement in gross may be personal or commercial. Personal. A personal easement in gross is granted for the grantee's lifetime. The right is irrevocable during this period but terminates on the grantee's death. It may not be sold, assigned, transferred or willed. A personal gross easement differs from a license in that the grantor of a license may revoke the usage right. We'll talk about licenses on an upcoming screen. Commercial. A commercial easement in gross is granted to a business entity rather than a private party. The duration of the commercial easement is not tied to anyone's lifetime. The right may be assigned, transferred, or willed. This type of easement is usually owned by the government, a government agency, or a public utility. Examples of commercial gross easements include a marine's right-of-way to a boat ramp, a utility company's right-of-way across a lot owner's property to install and maintain telephone lines. The easement in gross is the most common type of easement. Almost all parcels of property are subject to at least one if not several utility easements. Easement creation. An easement may be created by voluntary action. Necessity. Prescriptive operation of law. Grant or reservation. Implication. Government power of eminent domain voluntary action. A property owner may create a voluntary easement by express grant in a sale contract, or as a reserved right expressed in a deed. Necessity. As we said earlier, a court decree creates an easement by necessity to provide access to a landlocked property. Easement by prescription. If someone uses another's property as an easement without permission for a statutory period of time and under certain conditions, a court order may give the user the easement by prescription, regardless of the owner's desires. For a prescriptive easement order to be granted, the following circumstances must be true. Adverse and hostile use. The use has been occurring without permission or license. Open and notorious use. The owner knows or is presumed to have known of the use. Continuous use. The use has been generally uninterrupted over the statutory prescriptive period, which in New York is 10 years. For example, a subdivision owns an access road which is also used by other neighborhoods to access a grocery store. One day, the subdivision blocks off the road, claiming it has never granted the neighbors permission to use the road. If the neighbors have been using the road for the 10-year period, they may sue for an easement by prescription, since the subdivision owners can be assumed to have known of the usage. Easement creation. Easement by grant, also known as easement by reservation. Easement by grant is created with the express written agreement of the property owners. In conveying land by deed, if the grantor wants to reserve certain easement rights, he or she can stipulate such in the deed itself. For example, the grantor can convey fee interest in Lot 1 to the grantee, while reserving a non-exclusive easement for ingress and egress over the driveway located on Lot 1. Easement by implication. An implied easement can be created when a grantor conveys a portion of the real estate he or she owns, or when he or she divides a larger tract among separate grantees. In either case, a severance of parcels occurs, which is a necessary prerequisite to an implied easement. For example, property owner just sells off the mineral rights to his property. The mining company has an easement by implication to go onto the property to mine the minerals, but mining is the only reason the company may enter the property. Easement by condemnation. Government entities can create easements through the exercise of eminent domain, wherein they condemn a portion of a property and cause it to be sold for the greater good. A typical example is a town's condemnation of private land to create a new municipal sewer system. Most work to create new highways, roadways and sidewalks and to install utilities is the result of eminent domain. Terminating easements. Easements terminate by express release of the right by the easement holder. Merger, as when a dominant tenement acquires the servient property, or vice versa. Purposeful abandonment by the dominant tenement. Condemnation through eminent domain. Change or cessation of the purpose for the easement. Destruction of an easement structure, such as a party fence. Non-use of an easement by prescription. Appertenances. Appertenances are all the rights, privileges and improvements that belong to and pass with the transfer of a property but are not necessarily a part of the actual property. These rights pass to the succeeding owners, even if they are not specified in the deed. Typical appertenance rights are easements, air rights, water rights, subsurface rights, profit, license. We have discussed easements and air, water and subsurface rights. So let's talk a bit about profit and license. Profit. Profit is the right to take part of the soil and produce of the land, such as the right to take coal, fruit, or timber. Because a profit is an interest in land, it can be created only through a written grant or by prescription, not by custom or oral agreement. The basic difference between an easement and a profit is that an easement gives only the right to use someone's property, while a profit gives the right to remove something from the property. License. A license, much like a personal easement in gross, is a personal right that a property owner grants to another to use the property for a specific purpose. Licenses are not transferable and do not attach to the land. They cease on the death of either party, or on the sale of the property. Unlike a personal easement in gross, a license is revocable at any time. Licenses are often granted informally, as a verbal statement of permission. A farmer granting a neighbor permission to cross his land to reach and fish in his pond is an example of a license. Encroachments. An encroachment is the unauthorized, physical intrusion of one owner's real property into that of another. Examples of encroachments are A tree limb extending into the neighbor's property, violating his or her airspace. A driveway extending beyond the lot line onto the neighbor's land. A fence built beyond the property line. Encroachments cause infringements on the rights of the trespassed owner and may diminish the property's value, particularly when the property is to be sold. Encroachments often do not appear on the property's title records. A survey may be required to detect or demonstrate the existence of an encroachment. An owner may sue for removal of an encroachment or for compensation for damages. If an encroached owner takes no remedial action over a prescribed number of years, the encroachment may become an easement by prescription. Check your understanding. Print this screen, answer the questions and then advance to the next screen to see the answers. 1. What are the two basic types of easement and what is the difference? 2. What is a common example of an easement by necessity? 3. How are easements created? 4. Define encroachment and give an example. Check your understanding. Answers 1. What are the two basic types of easement and what is the difference? Easement appertenant and easement in gross. An easement appertenant attaches to the estate and transfers with it unless specifically stated otherwise in the transaction documents, while the easement in gross is a personal right to use and does not attach to the grantor's estate. 2. What is a common example of an easement by necessity? The need for access to a property so that it is not landlocked. 3. How are easements created? Voluntary action. Necessity. Prescriptive operation of law, grant or reservation. Implication. Government power of eminent domain. 4. Define encroachment and give an example. An encroachment is the unauthorized, physical intrusion of one owner's real property into that of another. An example would be a driveway extending beyond the lot line onto the neighbor's land. Summary review. This concludes Chapter 9. Below is a summary which you can review before taking your quiz. The two general types of encumbrance are those that affect legal ownership, value and transfer, and those that affect the property's use. Liens. A lien does not convey ownership, attaches to the property and terminates on payment of the debt and recording of documents. A property may be subject to multiple liens. A property owner may create a voluntary lien to borrow money or some other asset secured by a mortgage. An involuntary lien is one that a legal process places against a property regardless of the owner's desires. If statutory law imposes an involuntary lien, the lien is a statutory lien. If court action imposes an involuntary lien, the lien is an equitable lien. A general lien is one placed against any and all real and personal property owned by a particular debtor. A specific lien attaches to a single item of real or personal property and does not affect other property owned by the debtor. Summary review. Summary. A judgment is a lien against the property for 10 years. Lis pendens is a legal document giving notice of an action that has been filed against a parcel of property. Estate and inheritance tax liens arise from taxes owed by a decedent's estate. Corporation franchise tax, based on the net profit of the business, and if it is not paid, it becomes a lien on all the property. Internal Revenue Service liens, for failure to pay any taxes relating to income. Real property tax lien, ad valorem tax lien against properties as security for payment of the annual property tax. A real property tax lien has priority over all other liens. Mortgage lien, the borrower gives the lien to the lender as security for the loan on the property. Mechanics liens, secures the costs of labor of real property improvements. The priority dates from the time when the work was begun or completed. Summary review. Summary. Superior liens receive first payment from the proceeds of a foreclosure. Special assessment lien. State intangible tax lien. Vendor's lien. Municipal utility lien. Summary review. Summary. Two factors primarily determine lien priority. 1. The lien's categorization as superior or junior. 2. The date the lien was recorded. A junior lien is automatically inferior, or subordinate, to a superior lien. Among junior liens, date of recording determines priority. A lioner can change the priority of a junior lien by voluntarily agreeing to subordinate, or lower, the lien's position in the hierarchy. Summary review. Summary. Deed restrictions. A developer may place restrictions on all properties within a recorded subdivision plat. A condition can only be created within a transfer of ownership. A covenant can be created by mutual agreement. Easements. An easement is a non-possessory interest in property owned by someone else. The affected area must be defined. One cannot own an easement over one's own property. Easement appertenance gives a property owner a right of usage to portions of an adjoining property owned by another party. Transfer. Easement appertenance rights and obligations automatically transfer with the property upon transfer of either the dominant or servient estate, whether mentioned in the deed or not. Non-exclusive use. The servient tenement may use the easement area, provided the use does not unreasonably obstruct the dominant use. Summary review. Summary easement by necessity, granted by a court of law to a property owner because of a circumstance of necessity, most commonly the need for access to a property. There must have been a common grantor of the dominant and servient estates and a reasonable necessity for the easement, not just for convenience. A property owner could attempt to purchase an easement for light and air over the neighbor's. A party wall is a common wall shared by two separate structures along a property boundary. An easement engrosses a personal right that one party grants to another to use the grantor's real property. The right does not attach to the grantor's estate. Personal, granted for the grantee's lifetime. Commercial, granted to a business entity rather than a private party. The duration is not tied to anyone's lifetime. Summary review. Summary: an easement may be created in 6 ways. 1. Voluntary action. 2. Necessity. 3. Prescription. Adverse and hostile use. Open and notorious use. Continuous use. 4. Grant. 5. Implication. 6. Condemnation easements terminate by express release of the right, merger, purposeful abandonment, condemnation, change or cessation of the purpose, destruction, non-use. Summary review. Summary. Appertenances. Profit is the right to take part of the soil and produce of the land, such as the right to take coal, fruit, or timber. A license is a personal right that a property owner grants to another to use the property for a specific purpose. An encroachment is the unauthorized, physical intrusion of one owner's real property into that of another. Click here if you would like to open this summary as a PDF, which you can then print or save to your device. Chapter 9 Summary. Chapter Conclusion. In this chapter, we have discussed the difference between voluntary and involuntary liens, different types of specific liens, lien priority, different types of easements. In the next chapter we'll talk about deeds. Good luck on your chapter quiz. 1 of 18. If a lioner agrees to subordinate the junior lien he or she holds, what is the lioner agreeing to do? Change the lien priority. 2 of 18. Priority of a mechanic's lien is based on the date when the work was started or completed. 3 of 18. Rancher Norm is allowed to bring his cattle onto the neighbor's property to access a public water source. What type of easement does Norm have? Easement by implication. 4 of 18. A homeowner has hired a contractor to build a room addition. The work has been completed and the contractor has been paid for all work and materials, but fails to pay the lumber yard for a load of lumber. What potential problem might the homeowner experience? The lumber yard may place a mechanic's lien for the amount of the lumber against the homeowner's real property. 5 of 18. Which of the following statements is true? An easement does not give possessory rights. 6 of 18. A certain property has the following liens recorded against it: a mortgage lien dating from 3 years ago, a mechanic's lien dating from 2 years ago, a real estate tax lien for the current year, and a second mortgage lien dating from the current year. Which lien would take priority? Real estate tax lien. 7 of 18. Which of the following encumbrances would restrict the landowner's ownership, value, and right to transfer a clear title? Lien. 8 of 18. In New York, how long can a judgment real property lien remain in effect? 10 years. 9 of 18. What type of lien is the result of a lawsuit? Judgment lien. 10 of 18. The lien priority of junior liens can be changed by a lioner's agreement to do what? Subordinate. 11 of 18. When must a mechanic's lien be placed if the contractor is not paid? Within 4 months of work completion on a single dwelling. 12 of 18. A mortgage loan places what type of lien on the property? Specific lien. 13 of 18. Does a government lien automatically receive payment priority if other liens exist on the same property? No, because payment priority is based on the date of the lien. 14 of 18. Easements and encroachments are types of encumbrances. 15 of 18. What type of lien does an owner create when a property mortgage is negotiated? Voluntary. 16 of 18. What is it called when an unauthorized, physical intrusion of one owner's real property comes into that of another? An encroachment. 17 of 18. Which of the following is not an appurtenance? Pond fully contained on the property. 18 of 18. If a third party has been using a portion of a landowner's land without the owner's permission, but with the owner's knowledge for 12 years, what type of easement may the third party obtain from a court order? Easement by prescription.